What's up, everybody? Joe Brown with Heresy Financial here, and markets are moving today. Number one, credit spreads are widening, but not to the point yet where bankers are worried, and that should worry us. Number two, retail sales have surged despite inflation. So we're going to take a look at why retail sales are surging in spite of the fact that the prices are going up, and realize that the two are actually positively correlated, not negatively correlated. And third, we're going to look at what's been going on in Canada and why everything that's going on right now is bad, but it's not as bad as it could be. A central bank digital currency is the next level up from there. Ready? Let's dive in. All right, so take a look with me at this article from Bloomberg. We're looking at credit spreads. And so if you're not aware, this is basically just the difference in interest that's paid on treasuries versus investment grade debt. And so you can see they have this red line here. This is where at least the people that Bloomberg is talking to are worried. If this spread between the two gets over 1.5%, then that is the line at which they're saying, hey, this is when we need to worry. That's too big of a spread there. Right now we're at 1.09, which is well below that. And you can see historically, at least for the last decade, is well within the normal range here. Now, the expectation is that as the Federal Reserve continues to raise or starts raising rates, that federal funds rate pushes up. You can see here, if we look over here at what interest rates have been doing for the treasuries, we can see the 2-year has risen a lot faster than the 10-year, which has risen faster than the 20, which has risen faster than the 30. And in fact, the 20 is actually has a higher interest rate than the 30 here. And then when we look at something like, TLT, this is the Treasuries, a Treasuries ETF. This is, you're going to see the opposite effect here, right? Because this is the prices of the bonds versus what we were just looking at was the yields. So we can see here they've been moving down. And then when we look at something like BND, which is the Vanguard Total Bond Market Index Fund, it's been moving down as well, quite steeply. BOND is the PIMCO one, just so you can see a little bit of a different one here, but very, very similar here. It's just been falling. So interest rates on corporate debt have been going up, and one of the reasons why that's significant is because if we take a look here, non-financial corporate business debt, we've got a lot of debt in this country. Our corporations, our businesses are highly leveraged. And so as the federal funds rate starts to go up, that pushes the rest of the yield curve up, and debt becomes more expensive for corporations. Now, that's a problem only if they have to roll over their debt. And they do roll over their debt. And what that means is that basically means you get new debt to pay off the old debt. That means their costs go up because the interest rate on the new debt is higher than it was on the old debt. So that is going to become more and more of a problem as interest rates go up. Second, a little bit of good news here. This didn't really make the rounds. Elon Musk donated $5.7 billion to charity. Now, I don't really care what you think of Elon Musk, but this is something that you, or any billionaire for that matter, this is something that you normally see though from the ultra wealthy. And I'm not just talking the top 10 richest people in the world. I'm talking anybody who who makes any semi-significant amount of wealth in their lifetime. Usually they're extremely generous people. Usually they're very charitable. They give a lot away. And this is no different with Elon Musk. And it's really funny because he didn't indicate that that's why he was going to be selling his stock. For a couple of years now, he's indicated that he really doesn't need any money. He doesn't live on a salary. I think he's now living in a small little mobile home that the company owns, or at least he was for a while. He sold all of his possessions. So when he was selling all this stock, a lot of people were saying, oh, he's just, gaming the system. He's doing it. He's exercising stock options. He's getting these new awards from the company. He's just doing it to crash the stocks so that he can buy in lower and he can get rich. Well, first of all, he sold, 10 billion, maybe 11 billion total worth of company stock, Tesla stock. Half of that went to taxes, right? So he paid half of it to the government, and then almost 6 billion of it is going to charity. He did not say who he was giving it to, but the WFP here challenged Musk and said, "Hey, give us money and we'll solve world hunger." And so he said, if you can come up with a plan on how to do that, I'll give you the money, because from his perspective, he doesn't want it, he doesn't need it. And so it's not clear yet if that's where he put the money or if he gave it to another charity. What I would really like to see, though, is someday, 2 years, 3 years, 5 years down the road, a report like, he watched what happened to the money, and he can, show a report and say, hey, look, this is what the federal government did with my $5 billion, and this is what a charity did with my $5 billion. And he'll show how the government spent it in 10 minutes or something, and 80% of it went to, broken stainless steel thermoses for the Air Force, and, restocking their munitions and sending troops to places where we don't need them in about 10 minutes. And then, some of it went to, all the other places that the black hole of money that the government spends money in. And then he can show that, okay, the $5 billion that I gave to charity, solved world hunger, or fed, this many millions of children, and then it lasted this long, and it resulted in, X, Y, and Z. I'd love to see a report like that. Who knows if it'll happen. Moving on. Homebuilder confidence falls. They wait months for cabinets, garage doors, and appliances, and construction costs are up 21% year over year. This is exactly what I've been saying. This is not a repeat of the great financial crisis in terms of the reason why housing prices are going up. It is not the result of euphoria. It is not the result of bubbles. It is not the result of people buying 2, 3, 4 empty houses that they can't afford, thinking they're going to flip them later. This is the result of supply and demand. We had 10 years of zero building, and now they're trying to catch up, and they can't. Home builders are trying to, because the demand is there. There are more people that want to live somewhere than there are places to live. They're trying to catch up. They can't. In a project like a house, but if you're waiting for something like drywall or lumber or nails or concrete or wire, or anything, it puts the whole project on delay, and then everybody else has to wait before they can do their thing. And so you're seeing this kind of thing happen where they're just getting delayed and delayed and delayed and delayed. Meanwhile, costs are soaring 21%. So inflation 7%. No, home builders inflation is 21%. So good luck having prices come down anytime soon when all of the new ones that are being built keep on having to be sold for higher and higher prices. If you go to buy a new build right now, I don't know how many of you have tried to do that, but if you go and try and buy a new build right now, you'll notice they won't let you lock in a price until the house is built. That's because the builder has no idea how much it'll cost by the time it's finished. They have no idea how long it will take before it's finished. So we're seeing this at least right now. Doesn't look like there's any end in sight. Moving on, I want to show you, I tweeted out about the Emergencies Act in Canada. And talked about why it's, kind of like a precursor to a central bank digital currency. Right now, people are getting locked out of their bank accounts, but it's not just bank accounts, it's brokerage accounts. But it's not just brokerage accounts. It's literally any financial entity, any business. The government is going in and saying, we need you. And they're forcing the private sector to basically be their muscle on this, and they're forcing them out and saying, hey, you guys need to go take care of this. And so banks and financial institutions are having to look and say, okay, well, there's, all these transactions, they can see the data. Hey, this transaction went out to this certain GoFundMe project or something like that. They're freezing accounts and seizing assets. The problem is, right now, they're relying on the private sector to enforce and be their muscle. With a CBDC, you don't need that. A CBDC is a central bank digital currency. That means that all accounts are directly with the central bank. So you don't need to rely on the private sector in order to do your bidding. It's all centralized. The central bank controls it all. And so if the central bank wants to credit a specific account, they can do it with the push of a button. If they want to debit a certain account, they can do it. If they want to freeze an account, they can do it. They don't have to push out or rely on emergency acts. Monetary policy and fiscal policy and legislation and censorship is all under the control of the central bank. Massive, unprecedented power. That's why I always say a CBDC is a tyrant's wet dream. And so you think what's going on in Canada is bad right now. Just be thankful that they don't have a CBDC, because it could be a lot worse. And anywhere that rolls out a CBDC has the potential to be a lot worse. Moving on, retail sales surged 3.8% in January, which is much more than expected. Now, I don't know why people are always surprised about this, but when prices are going up every single month, and increasingly so, every month prices go up more than they went up the last month, what is the logical thing to do as a consumer? If you know I'm going to need some bacon and steak and hamburger and chicken and clothes this month, I'm going to need all that again next month. I'm going to need all that again the month from after that. What am I going to do? I'm going to buy more. This month, I'm going to buy what I need next month right now. I'm going to bring forward those forward purchases into the present because I know I'm saving money. If I buy them right now, I don't have to buy them next month when they're more expensive. That's a real return on my money. If I buy something this month for $10 that I know next month is going to be $11, well, alternatively, I could invest that $10 and let's say by next month that investment is worth $11. I didn't gain any purchasing power. I have a nominal return that I have to then use on my investment, on my purchases. So that's the exact same thing. There's no opportunity cost there. It's a real return on your money if you know prices of goods are going to be going up that you need in the future to buy them now, because then it's the same thing as getting a real return on your money than using that to buy the more expensive products later. And so it is perfectly logical that sales are going to surge when inflation continues to surge. And that is exactly what we see all around the world, all throughout history. Anytime inflation really starts to get going, you see people start to spend their money in advance and buy things. And then it gets to the point where people are buying things they don't need just to dump the currency, because at least they have something then that maybe they can barter or trade or sell to somebody else for something else that they need in the future. In response, the markets are moving. Real quick note on gold here. Gold, if you've been following me for any length of time, every time I show gold, I've had these lines on here forever. And, a lot of people think technical analysis is voodoo, and that's fine. If you don't want to make trading decisions on it, that's completely fine. But technical analysis, all it's doing is pattern recognition. When prices move, it's as a result of the aggregate of behavior in markets, and from that patterns emerge. And so there's a descending trend line here and an ascending trend line here, and every time you've seen the price consolidate sideways, that means buyers and sellers are kind of both competing on trying to push this price up. And so as it gets lower, buyers come in. As it gets higher, more sellers come in, and you're going to have a breakout one way or the other. And we had a breakout here, and just like clockwork, we came back down yesterday, retested this trend line, and are popping back up here. And so this is exciting because it's moving right in line with rates. Normally they would be inverse, but as interest rates are moving higher, you're also seeing gold move higher. So it's making up some of its ground that it lost over the last year, as it was supposed to be moving, inversely correlated to that. And so that is a very bullish indication there. Silver also a little bit making a little bit of a move here, and Bitcoin has retraced some of its gains from yesterday here. We're seeing a little bit of an upside down head and shoulders form here. We're getting some action where it looks like we put in a bottom here. We shall see, but as tyranny of financial systems around the world kicks up, people are looking for alternative payments networks where the payments can't be reversed, and where you can store your wealth in your mind with a couple word phrase and take it anywhere in the world. And so Bitcoin is going to be more and more valuable if what we're seeing with our neighbors up north continues. Stock markets fairly flat today. The NASDAQ, the S&P 500, the Russell 2000, and we already looked at rates. And then finally, we're looking at oil. It is almost back up to its 93 mark there, and we can see here for 4 trading days now, it's been butting up against this $93 mark here, which means that we're more and more likely to see a breakout here to the upside, especially as geopolitical risks between Russia and Europe and China and America continue to escalate. I really hope they don't. With everything that's been going on right now, would not be surprised to see if they do, and energy costs will skyrocket as a result. Who knows how high oil could go in the short term as a result of that. All right, and that's it. 2 things that I'd like to note here. Number 1, I am on Locals now. That's where I've started a private community where I won't have my hands tied behind my back anymore with the things that I'm able to say and talk about. Number 2, I will be in Dallas on March 5th. I would love to see you there. If you can join, I've got a sign up link in the description below. As always, really appreciate you guys. Thanks so much for watching. Have a great day.